Good morning. We are officially live, so to speak. Welcome to Money Matters Friday. And this is being pre recorded, coming to you because, as I have mentioned, I am actually not here. Well, I am here right now recording it, but when you're watching it, I'm not here. I am hopefully somewhere safe in the woods, far, far away from civilization. And today, in this episode, we're actually going to be talking about crypto and what's going on in that world. We have some news about the Twitter, and you might have heard about it, and what sort of chain reaction that has created, not just for the crypto holders, but also for the currencies, as well as what are folks doing about it. We're also going to be discussing something incredibly important, that is the development on the other side of the planet. Well, for me, on the other side of the planet, in Japan. Japan reportedly will be releasing its first stable coin that is coming out of the largest bank in Japan. And this is huge and positive news for cryptocurrencies and hodlers. And of course, we're going to be talking about a very, very important aspect of cryptocurrencies known as oracles. So if you're brand new, don't know what crypto oracles are or oracles are on blockchain, today's episode is going to explain that to you. So you absolutely want to stay tuned in and watch the show. Let's do this. And good morning. Welcome, welcome, welcome. I hope you are doing excellent today and that you're having fabulous Friday and are excited about the weekend coming up. Now, today we're going to be talking about crypto, blockchain, and all kinds of cool things that are happening in that neck of the wood. First, let's get started with what's going on in the crypto market. And so here we're going to be able to look at the top currencies. And as you can see, we are seeing some down action across the top markets. We are having some, of course, up. So let's take a look at the winners, so to speak. And you will see Flexicoin is up 22, almost 23%. iExact RLC up 13%, Waves up 9%, Synthetics up 5, Aurora, Unus SED, Leo, Tezos, Reserve Rights, Agora Rand Hedge Trade, and so those are some of the coins that are performing incredibly well. The coins that have been a bit in a slump are Bytom, Ren, DV, Matic Network, Digibyte, Verge, Engine Coin, Bancor, Loopring, Ontology. So you can see that we are having some very, very serious up and down moves. And of course, when we look at Bitcoin, it is down quite a bit. Well, it's not quite a bit. It's 1.25%. So for Bitcoin, for crypto, that's nothing, right? But it is down and it is at $9,100 right now. And while we don't know always exactly why the price goes up and down, and we talked about it, how actually just this week, how, when something happens with the markets, people tend to give it sort of a story of, well, this is exactly what happened and that's what caused it. I don't know what caused it. I'm not going to make up a story, but there is a potential that this particular news is what might have caused some of the challenges, and that is that Twitter has been compromised. Yes, Twitter reveals that its own employees' tools contributed to unprecedented hack. And basically, what ended up happening is that somebody hacked into Twitter accounts of some of the most prominent people out in the world that people are following. People like Joe Biden, Elon Musk, and many, many other individuals who are very much followed within the space, within our society as a whole. And so what they did is basically hacked into their accounts and posted as if Elon Musk or Joe Biden were posting this stuff saying, hey, if you send Bitcoin to this address, I will match it. Let's make more money together, or whatever. Something along those lines. Now, people have fallen for it. And for many of us, this might have been, sorry, I gotta close the window. Kitty cat is not gonna be happy, but the noise is coming in and I'm not liking it. Sorry about that. So people have fallen for it, and the Twitter is basically going in and saying that, hey, you got to do this stuff. And so Twitter support came in and said, we are still ongoing investigation right now, and we detected that what we believe to be coordinated social engineering attack by people who successfully targeted some of employees with access to internal systems and tools. And so one of the things that sorry, you didn't see this, so I'm going to put it over here so you can actually read it. This is the tweet that I just talked about. So one of the things that I think it's important to keep in mind is that Twitter is very much a centralized company, right? They have the database, which means that all users and the employees of Twitter can actually go into the back of the account and change all kinds of stuff. They can ban you, they can change your username, they can change your, like, they can do a lot of things. Most of the times they don't do that, but when the position or opportunity exists for something to that happens, is that when you hack into the system, you can actually then have access to people's accounts. And that's what they believe happened with the Twitter, that they were able to get access into the Twitter employee accounts that have access into the database. They went in from the back of the database and changed the stuff, were able to actually forego the two-way two-factor authentication component to be able to then basically go in and change what is being tweeted. Now, shortly after all of this have happened, about 2 hours into it, they actually have banned, or not banned, but they have stopped all of these accounts from the ability to tweet, and kind of stopped it, trying to go in and fix it. And so Twitter has been having a very, very long night trying to get this under control and fixed. And of course, what has happened is that rage has transpired within crypto world, and of course those that are not in the crypto world, and are basically starting to go in and saying, Bitcoin has to be banned and cryptocurrencies have to be banned. And so they're taking their anger and upset onto something that has nothing to do with this. They just happen to use this stuff. Now, if we look back some 20, 30 years ago, now, of course, internet wasn't as prevalent, but the scams were very prevalent, and people are using all kinds of different scams when it came to credit cards, right? And that is still being very much used. We all know about these emails of the Nigerian kings and princes that send you emails and say, hey, send me the money over here, and people fall for it. So I think the biggest lesson here is to understand that when something is posted on the internet, it doesn't mean it's 100% true. You got to go and verify it for yourself. And typically, when you see a hack, when you see something that says, hey, put your money over here, remember those things? Like, I remember as a kid, you would do those letters where you send out like a letter of, like, send me $1 and I'll send $1, right? And I mean, we know that those are scams. These are just same thing, just 2.0, in a new age, new era of things. And instead of using those letters with like $1 bills, they're using, instead of taking credit cards, they're using now, cryptocurrency accounts to do this stuff. And so, we are seeing names such as Binance, Coinbase, Kanye West, Elon Musk, Joe Biden, Jeff Bezos, Warren Buffett had their accounts compromised and used to share a quote-unquote giveaway that promised to double the BTC of anyone who sent Bitcoin to a particular address. Now, of course, anybody who has any information or knowledge about crypto and kind of how this works smelled this a mile away. But allegedly about 300 some 400 people did not, because they went in, fell for it, likely because they don't have enough information or education when it comes to crypto and investing in it. And if you find yourself to be one of those people, I invite you to come to onedealaway.com. You're going to go into on demand and you're going to look for Crypto 101. It's an absolutely free course. There's like 50 some modules that you go through, and we teach you everything about the basics of getting into crypto, investing in crypto, keeping your money safe, and really understanding where you can go in and find more information about this stuff so that you don't become a victim to scams like this. It is absolutely free, and it's my gift, it's our gift to you, so that you can actually go in and learn and protect yourself from something like this. I mean, this is quite silly. Now, Sun, who is actually a CEO of Tron, is vowed to weed out the culprits by putting up a $1 million bounty for information leading to an identification of people who have taken over the accounts and who have done this stuff. So, whatever the source of attack, it's generated headlines around the world, and it's painting the Bitcoin in a bad light, although the hat is not directly connected with the Bitcoin protocol in any way, shape, or form, but they have used the payments in Bitcoin. And that's why people are upset now with Bitcoin. That's kind of like being upset with the dollar for the fact that the federal government is printing funds, right? Your anger, while I understand it, is directed at a completely wrong area and component. Many unsuspecting Bitcoin holders will tricked into parting with their funds, and of course, expecting. And so here's that part of the FOMO, right? Oh, you put your money in here, and you're gonna get 200,000 investment back, and you're like, yes, I'm doing it. Don't fall for this stuff, y'all. It's a very old trick in a book of the snake oil salesman that were like back in the ages, on the Pony Express, travel from town to town, would sell basically a glass of water telling you that it's something magical that is going to do things, and people fall for it. It's the same thing, just new way of doing it. We don't sit on the horse and buggy doing that, going town to town. Now we hop on Twitter and do it that way. So don't fall for it. Pay attention, read, and don't get your emotion into it. Use your head for just a moment, because when you do that, you will be less likely hackable. Justin Sun and the Tron Foundation also saw their accounts temporarily suspended following the attack, which also targeted Gemini, KuCoin, Bitfinex, Ripple, Cash App, and many other individuals. He decided to issue $1 million bounty to identify hackers, and mostly is born out of a desire to redeem the industry's reputation. There's evidence that the attack began with the account of crypto trader Angelo BTC before spreading to other high follower accounts such as Binance. In a statement, Justin said, "We are working closely with Twitter to resolve this issue immediately and return the accounts to normal. We're always vigilant in handling our accounts, operating safely and responsibly, taking the security of our accounts to the highest standards possible." However, there is a problem, right? There is a problem because Twitter is not decentralized. It is very much centralized, which has the centralized database. And if you do a little bit of search online about centralized databases, you will very quickly learn the risks that such events and such behaviors pose to everybody, including the companies who have them. So that is the reason of why we are potentially seeing something like this of Bitcoin kind of going down. And, if we go in and take a look, and it's going to take a moment, it looks like, for Bitcoin to load onto the page so we can take a little bit of deeper look, I think you will quickly realize that this dump is potentially attached to this Twitter fiasco, so to call it, even though I cannot say for 100% that that is exactly what did it. And for some reason, the chart is loading. So there we go. While it's loading, we're going to let it load. We're going to revisit if and when it decides to actually participate with us and play along. But we're going to switch to a little bit more interesting and positive news when it comes to cryptocurrency space. And that is the news that is coming out of Japan. Japanese banking giant to issue its own stablecoin in late 2020. So this is not going to happen in 2022 or 2021. We've been hearing all kinds of news about, China, US, Russia, and here comes Japan right out of the gate. You don't even know that it was coming and it was happening, and yet they are here. And that is kind of the exciting part of the 21st century with technology, that you have all of these things that are happening sort of in the background. You don't even know about them happening, and then boom, they just come out of nowhere seemingly and surprise you with their move. Japanese largest financial institution, Mitsubishi UFJ Financial Group, is planning to issue the MUFG MUFG token in the second half of 2020. How would you say this? MUFG? Like, I don't know. Let me know in the comments, please, of how would you pronounce it. Mitsubishi UFJ Financial Group of MUFGT, the fifth largest bank in the world, is reportedly planning to issue its own digital currency in the second half of 2020. They initiated it back in 2015, started as a project designed to run on the blockchain, facilitate some peer-to-peer transaction, but then they started, changing, switching, turning things around, and next thing you know is they're going to be rolling out a brand new crypto payment that is going to be pegged 1-to-1 to Japanese yen. Nearly 1 million Recruit member stores have already signed up for this collaboration. What that basically means is that folks are going to be able to use one of these puppies, go to the store, use the token, and boom, they're going to be able to transact in it. And I think that that is going to be a very interesting piece that is happening. And that's kind of very, very exciting part within it. So it's one of those things that is very cool to see, and it's saying that the MUFG is going to be a first Japanese bank to issue digital currency, and this is very cool kind of piece to see, and I think we're seeing more and more of that stuff. And so even with these weird news about Twitter hacks and all of that stuff, I am still very, very, very bullish when it comes to the crypto, especially the fact that I am seeing that a lot of the institutional investors, large investors, are all jumping on the blockchain train, as I like to call it. Say that fast 5 times because I can't. I can do it once, and that's about it. But we're seeing that stuff, and so for me, I still see a very bright future when it comes to blockchain, when it comes to cryptos, and the ability and need to learn about it is crucial right now if you are to keep up with the times and not die off like the dinosaurs did. Now, with that being said, there is a new thing, well, newish, let's call it newish thing that you might have heard where people are talking about, yeah, this is the new project that is happening and they're using the oracles and they're helping with the oracles. And this is very important because oracles are being used. And so I wanted to spend a little bit of time for all of us to learn what the heck are oracles, right? What is an oracle? And if you just simply look online for an oracle, you're going to find for an Oracle Corporation, right? That's not the oracle that we're talking about here. We're talking about different kind of oracle. So I found this article that I figure would be kind of cool for us to go through together and learn more about what is a blockchain oracle. Okay? So let's jump in. Let's learn together of what this is and what it means for the blockchain development, as well as for your evaluation of what are some of the projects that might make sense to potentially invest in or at least follow. Now, the blockchain technology is still in its infancy. We can all agree to that. The solution that many technologies are pursuing is to use the blockchain for some transaction and to take less critical ones offline, or as it's known, off chain, before adding them back onto chain in large amounts. Now, blockchain is very linear. And if you know anything about blockchain, and again, if you don't, I highly encourage you to get into Crypto 101 course because we explain all of this stuff. But if you know anything about blockchain, then you understand that blockchain is very, very linear. So you have transactions that happen in this block and this chain, right? Excuse me, sorry about that. And then you have new transactions that are coming in, and you have a brand new block that is chained and linked to the previous block that still reflects what kind of happened in the past, plus adds all of the new things. That's sort of the benefit of the blockchain, that it kind of keeps the history right here, and then it connects the history in very technical way, in very programmatical way into the new one, so that you can't really break the history and change it back. It is going to always kind of exist and be there. Now, the blockchain is very linear, but well, life is very much interesting. As I like to say, life tends to show up and you got to deal with it. And so when we have this sort of life events kind of happening and you have this very linear and non-linear, we have to somehow make a connection with them and link them together, so to speak. So how can we sync a blockchain to record new information that is not by definition determined by previous on-chain transaction? Oracles hold the key. An oracle is a way for blockchain or smart contracts to interact with external data. Inbound oracles bring off-chain or real-world data to the blockchain, whereas the outbound cousins do the opposite. They inform the entity outside of the blockchain of an event that occurred on it. So we have an example right over here, and I don't know if it's a great example, but it's an example that they have provided. So let's look at it. Inbound Oracle allow data pertaining to real-world events to be called to the blockchain, with the use cases ranging from automated traded based on the current price of an asset to gambling DApp payouts in the event of a win. Smart contracts containing the rules and oracles provide them with the data they need to trigger and execute on those rules. Now, so basically, it's kind of like one of those things that I think this is one of those confusing ones that I don't know that it helped me completely understand. But if we continue learning and continue reading, which we are about to, I think it's going to become a bit clearer. So let's do it. Before distributed ledger technology, the technical process of querying was sufficient to bring data points into and out of applications from other data sources. As blockchains are deterministic and sequential, the random ordering of off-chain data point needs to be managed in a different way. So the oracles are basically can be hardware or software, and they act as data feeds, usually from a third-party service that informs the blockchain about events that occurred on it. Consider a smart contract for the release of payment when a certain obligation is met by one of the parties. So as a real estate investor, I always like to bring it back to real estate because that's something that I understand. So I always like to break it into something that I understand. You might want to use something a bit different. So say, for example, that you and I are engaging in a transaction of a home. I am selling it, you are buying it. And we want to do this stuff using cryptocurrencies and smart contracts. Now, we can't necessarily transact the home on the chain because the real estate is, well, not on it, right? Now, we could do some of the other stuff potentially with it, but right now we're not quite there yet. So say that we decide that instead of using US dollars, for example, because maybe you come from a country that is not US based, maybe you come from Europe or Latin America or wherever, and we decide that we're going to use a stable coin, maybe a DAI, for example, right? Let's agree to that. So we'll use a smart contract using DAI that says that upon, an inspection and meeting all of the stuff, and that the process is being completely transferred officially through, when you transfer a home from one owner to the other, you have to register it through the deeds and that kind of stuff, right? Well, that stuff is not on the chain. So we could do a contract that says when it's officially transferred, that I will get, when we sign the contract, maybe I get 10% of DAI into my account from your account. So we signed a contract and we can do that on the chain, and I get 10% of the agreed upon price, say $100,000. So I get $10,000 in DAI. So let's say 10,000 DAI because it's typically 1-to-1. It's not always 100%, but let's agree on that. So I get 10,000 DAI. You still hold to 90,000 DAI while we go through the transaction. We then go through, you inspect the property, you agree, you love it, everything is great. We got to send it over to the Register of Deeds. That takes, a week, 2 weeks, 3 weeks, depending on how busy they are and where we're located and all these different laws and rules and regulations that exist that are different from state to state and city to city. Once that is done, then we can use an oracle to report that, hey, property A has transferred from Nev to you as the buyer. It goes into the chain, it verifies it, and then the smart contract automatically sends me the remaining DAI into my account. The remaining 90,000 DAI come back into my account. You no longer have them. I do now, but you now have a property. That's where oracles play a huge part. That was the way that I was able to understand what do oracles do and how. So as they say, let's continue here. We're here on the blue part. When that obligation is met, the oracle can be used to verify the fact, trigger the smart contract, and execute the release of funds. That is exactly how it works. Okay. So the need for oracles has risen. They are, by definition, the middleware between the real world and smart contracts. Just like we explained right here, right now, when we talked about the whole real estate components and kind of how that works. Now, here are some of the use cases in supply chain. Hardware oracles include IoT, Internet of Things, and RFID sensors and barcodes. The information they capture is brought onto a blockchain based supply system, giving users a full suite of information. Software oracles sorry about that, are data feeds that are incorporated into the blockchain system to trigger events and decisions. Chainlink has tokenized its network of oracles to handle the problem of provenance, which is basically the weak link in any supply chain. Uh, because human oracles, right, individuals, can enter the data into the smart contracts, that basically means that they could potentially enter erroneous data into it, triggering smart contract to go off when they're not supposed to. But Chainlink has developed a new way of how to do and prevent that stuff. Let's learn. Providers of data share a stake of Link, which is the token on Chainlink, to use the network. So they have to buy into the network, then they have to stake it. Remember, staking is kind of like a saving account, it gets locked into the contract. And in the event that they provide inaccurate data, they're basically those tokens are forfeited, so they lose the money if they lie, right? So they're incentivized to tell the truth. Blockchain technology has ushered a new technology so radical that companies are beginning to realize they need to be building IT infrastructure around it to accommodate its more rigorous demands for verification and trust. Oracles are very much at the forefront of that change. Expect more of the data to become oracleized as companies begin to bring blockchain into their operations. So there you go. This explains a little bit, hopefully to you, what oracles are. So when people are talking about certain protocols using oracles or not using oracles, that the oracles are brought in, that there's the off chain, sorry, I was going to say off link, off chain data that is being used, being brought onto the on chain. Now you hopefully understand a bit better what that is and how it all works. So there you go. There you have it. I know it's a bit shorter show right now, but hopefully you will forgive me and hopefully this is very helpful to you. If you have liked the show, do me a huge favor, smash that like button, hit the subscribe and the bell so that you get notified every day when the new show shows up live on YouTube. Thank you for watching. Until next time, stay forever money blessed and do remember, you are only one deal away.